cam just froze.
Okay. Well, whatever you need. Feedback time.
All right, should be good. You're live.
All right, Ryan, are you going to play a video before we start here?
I did.
You already did. Well, welcome everybody to the 100th edition of TaxSpeaker's Q&A from Bob Jennings. We've had an awful lot of people subscribe to this. Of course, the reason for it was I get overwhelmed with questions, and my office came up with a solution after I reached a frustration point. So it's worked out very well. And if you are a subscriber, you know how to do it. You send a question to info@TaxSpeaker. And every week we'll choose anywhere from 12 to 20 questions that I'll try to answer. Now, I'm not in charge of those, and if you send me an email, I won't answer it. In fact, I delete it. It goes on to info@TaxSpeaker, and then I tell you the way you can guarantee that your question will be answered. If you send that email to info@TaxSpeaker, and then you drop $20 cash in the mail to Matt Johnson here at the office, I can be assured that your question will appear that week. Because Matt Johnson here in our office, our video guy, is the guy that takes care of this. We haven't done it before on YouTube, and I don't know if we'll do some more. The guys are telling me a few minutes ago we need to do a bunch more YouTube videos. Of course, the issue is time. So we have about 15 questions this week. We are going to be giving away a Galaxy.
5 of them.
What? A Galaxy? Oh, we're going to be giving away 5 Samsung Galaxy Tab A's. And during the thing, I'll ask a question every now and then. And the first person who gets it completely and 100% correct will win one of these. We're going to give away 5 of them. These are, Ryan told me a minute ago, they're about $250 a piece. In fact, he says they're very nice. They include the charger, 32 gigs of RAM, nice 10-inch screen. What else should I say, Ryan? Anything else I ought to say?
For Q&A subscribers.
For Q&A subscribers only. So if you're watching and you're not a Q&A subscriber, you're not going to get one. So let's see. I have a couple of questions, and I'm starting. Let's see. I'm here.
Ignore that.
No, that's okay. Leave them up there, Nancy. I'm glad you're here. Matt, thanks for doing these. Thanks, Bob, Mary. We appreciate all those comments. Hey, Tony, how you doing, buddy? Good to see you. And Judy, thank you so much. And let's go ahead. Let me jump into a few of these. I'm going to do a couple of questions, then I'll give away one of the Galaxy Tabs. Number 1 says, one of the many questions on PPP forgiveness is what amount of profit sharing can we use in forgiveness? I've got many clients who are paying their 2019 now in 2020, but I assume we can't use that whole amount in payroll cost, but only 8 weeks worth, even though it's for 2019. Do we allocate it? Whatever. Does anyone have input on this? Also for 2020 profit sharing, which we don't figure till the end of the year. How can we use that as part of the payroll cost, possibly contributing 8 weeks worth now? The law uses 2 key words, the words incurred and paid during the 8-week measurement period. However, the SBA's examples kind of indicate to me that they will accept anything paid if it was owed at February 15th. Now, don't quote me on that because we don't have clear guidance. SBA had some frequently answered questions on May 6th that said payroll costs include payment of any retirement benefit. There's no other definition that's currently available. Here's my opinion. That's all that we got is an opinion. This could change tomorrow. If you saw our newsletters last week, you know how they are doing 180-degree flips every couple of days, changing what's already out there. They have an impossible job. The IRS, I think, is doing a much better job than the SBA, but here's my opinion. My opinion would be an amount paid during your 8-week measurement period. If it is for a prior period, I think it qualifies. Now, that could change tomorrow, but that's what I think. An amount prepaid to the future, I don't think will qualify. However, I think there's one other thing to consider. I think if you are an employee, for example, you have a 401k or a simple, and you're allowed to defer into that simple, I think any amount deferred during that 8-week period, whether it's 401k or a simple, will qualify, as would the employer match, because that means it was incurred during the 8 weeks and it was paid during the 8 weeks. Until we get clarification, that's what we got. No one has the answer. My big fear? My big fear is that the banks will interpret this in their own manner, which, if you're like me, I found every bank I dealt with interpreted things just a little bit different. Number 2, I have a client who annually has made a non-deductible contribution to her traditional IRA and then converted it to her Roth IRA. She did that again early in 2019. Then in October of 2019, her advisor advised her to roll over some money from her 401k at a previous employer to an IRA. So think what we've done. She put money in a non-deductible early in 19 and then converted it early in 19 to a Roth. Fine, dandy, allowable. That's called a backdoor Roth. Then late in 2019, financial advisor had her roll a 401k over to an IRA, and I assume, maybe to do something with that in the future. If you're familiar with the rule, when you convert a non-deductible to a Roth, you have a taxable issue if some of that conversion money, or if there is any IRA money other than non-deductible. So if I had $5,000 in a non-deductible I converted to a Roth and I don't have anything else, it's free. But if I had $5,000 in a non-deductible and $5,000 in an IRA, like in this example from later in the year, then if I convert the first one to a Roth, you have to say, well, only 50% of the total monies are tax-free and 50% are taxable. So your question is there any support for an argument that since the original non-deductible contribution and conversion to the Roth occurred prior to the rollover, that it could be considered as non-taxable because it was done as separate deals, one early in the year and then a different later in the year, saying on the day we converted we didn't have these other accounts, and then ignoring the later in the year amount. Okay, well, I wanted to give you a citation on this one. Internal Revenue Code Section 408 D2B. 408 D Delta 2 B Bravo states that all distributions during the year shall be treated as one distribution. My answer is, I don't think you have an option here. I think your client had a taxable conversion way back there in February when they first did it. All right, now go ahead and get ready. I'm going to do one more question, and then I'm going to ask you some totally irrelevant trivia question. And the first one of you that gets it 100% correct, we'll give you one of these tablets. We'll ship it to you at our cost. You have to be a subscriber. You have to be a subscriber. Number 3, can a 100% shareholder of an S Corp use his salary in the payroll the payroll retention tax credit calculation? No. Related parties are not qualified individuals for the retention tax credit. Now, if you don't know that retention credit, that's that $5,000 deal. You get 50% of up to $10,000 in wages and health insurance per employee, $5,000 max per employee in a year for keeping them on. And no, you're not going to get it for your own wages or your family. And your family includes your children, your spouses, your spouse, your ancestors, brothers, sisters, descendants, nieces, and nephews. Here we go. Question number 1. Trivia question. Right now, what's going to happen? You type in your answer. It has to be perfect. I am okay with a misspelling, Matt. Matt's sitting in the back of the room listening. But what's going to happen is if you get it right, Matt's going to check to make sure you're a subscriber. Number 1.
Submit their email address as well.
And make sure you give us your email address so that we can verify that you're a subscriber, okay? So I'm going to ask the question. Submit your answer. Take as long as you want or as short. It's going to pop up here. And let's see. I got to read a few of these. So let me go ahead and ask the question. Then I'm going to read a few of these. There we go. Here you go. Number 1. If you read my newsletter, you know this answer, and if you know anything about me, you know this is a very important thing to me I've written about many times. What accountant was awarded the Congressional Medal of Honor for heroism in Vietnam? Hey, Trish, it is good to see you. Thank you. Sean, man, I see you all the time in Maryland. Thank you. South Central Wisconsin, Dennis, I'm sure it's wonderful weather, just like here, 38 and cloudy. Hi, Bob. Good morning from rainy Oregon, Janet. Ryan, Southern Indiana is pretty comfortable right now. Well, Ryan is sitting in the back of the room. Northern Indiana is not. And Kelly, thank you. Marianne, good to see you on here. And Barbara, I never could say that town's name, Chinkoteg. Sun is out and it's a beautiful day. Mike Lay, Roger Nickel. Are we getting to an answer? Ed DeCarpio. Hey, Ed. We miss seeing you fly all the way in here from Seattle. Tony is not apparently sure of the answer. Jeremy says, oh, I forget. Well, Mike, you got a last name. I'm seeing, we're very close down there. What do you think about Barbara? She misspelled.
Got Bernie Adkins.
Kelly has the full thing.
Oh, Kelly Ventura.
Barbara Smith got it first. Oh, Bernie.
Kelly, is Kelly a subscriber?
Need an email.
Kelly, we need your email, Kelly Ventura, to clarify.
First.
Thank you, Barbara. Chinkotig.
Trish got it first.
Trish Somstred got it first. All right.
She's subscribed.
And is she a subscriber? All right, Trish, you got it written down there, Matt? Trish will be mailing this to you because I'm not going to fly up and deliver it. So there's number one. I'm going to do a couple of more questions and we'll do another one. Question number 4. Do you have any recommendations for individuals who have not received their stimulus check yet? And the Get My Payment tool says it does not recognize their information. They received a refund on their 1040 last year via direct deposit, so there's no reason why they wouldn't have. First thing I would try is go in as the other taxpayer. You got a married couple? I bet they've been going in with one name. Try going in as the other name. That would be the first thing. The only other thing I have on this is the FAQ page says the taxpayer needs to wait for a paper check because there is some return issue. You know, I have this little bell tinkling back here that I am just vaguely worried about an identity theft issue. I probably shouldn't have raised it. It's probably a non-event, but it is something I ought to be aware of. Let me try another. Number 5, are incarcerated felons. Really? Are incarcerated felons entitled to a stimulus check? I got an idea. Let's take all members of the House and Senate and test it and see. What do you think about that one? Well, let me get back to the question. Are incarcerated felons entitled to a stimulus check? They perform menial jobs and receive a W-2, although, of course, much less than the filing requirement. If they file a 2019 return, would they get a stimulus check? They are specifically excluded from getting a stimulus check. Now, if you get our newsletters, last week I think I sent 2 of them, and in the second one, IRS had flip-flopped what they had told us a few days before, but no, a felon is specifically excluded from qualifying for this one. All right, let's do another one. Is that right? 3, 4? Yeah, let's do another one. Okay, let me see where we are here. Kelly, I thank you for your email. You're just short. Trish got it a while ago. Judy, you got it right too, but it was Sergeant Major Benny Adkins, an attendee out of Auburn, Alabama. And if you get my newsletter, the link is to Sergeant Adkins' actions in Vietnam, and quite a guy. Leslie, good to see you. Thank you. I see you're going to be taking the tech class here in a couple of weeks. Check the address with USPS for formatting issues. Can Bob repeat the tablet question? Kenna, you're just too late. You know, somebody else always won it. So here's number 2. Get ready. Number 2. Year and model. And if you get the model wrong, not only do you not get a tablet, you owe me one. What kind of car, year and model, did I drive to Alaska? Question?
No, I know the answer.
Oh, you know the answer. All right, what kind of car, year and model, did I drive to Alaska? While you're answering that.
An easy way to find out is to Google search Bob Jennings, Alaska.
If you go to Google and you put in 2 words, Jennings and Alaska, you'll find it, Ryan tells me. There we go. Mike Rousseau. Let's see if Mike's a subscriber. Holly, a super bee? Really? Really?
Mike Rousseau.
Mike Rousseau, is he a subscriber?
His email.
I know his.
Mike, we need your email to check. You got to have the year. Got to have the year. All right, so I see a couple of correct answers up there. Mike Rousseau's the first correct one. Roger Nickel, I figured Roger would get that. It is a 1970 Plymouth Superbird. Barbara, the first lady to get that one. Okay, there's Mike's email address, mike@lesstaxingservices.com. And Joan is hoping that he's not a subscriber because she's got it up there with her email address too, as does Stephanie.
He's good.
And you're telling me that Mike is a subscriber?
Yep.
All right, Mike says he is too. So Mike, you get tablet number 2. We got your email address, which means we got a shipping address, Matt?
Yeah.
Okay, well, let's go on. Number 6, in your newsletter dated May 5th, last week, you say that any expenses with PPP that are forgiven are not deductible. How do we make the accounting entry for wages? You know, we are all getting all wrapped up in this stuff. If they're not deductible because of the forgiveness of a loan. I'm having a hard time wrapping my head around this whole issues. Clients are blowing up my phone to know how to treat this forgiveness element and now not being able to deduct the wages. Okay, so put it in wages, just like you've always done. Don't change anything. Record it the way you've always done it. On the tax return, then, let me ask you, what do you do when a client makes a political contribution? You don't deduct it, right? What do you do when a client pays a fine? You don't deduct it, right? It's still an expense, but you don't deduct it. What do you do when they have entertainment? You reclassify it to office supplies, as we all know. Seriously, go ahead and record it just like you always did. In theory, then, you just won't be able to deduct that dollar amount. So you'll have to keep some manual record of the portion of wages that is deductible and the portion that is not. Now, let me clarify. The IRS came out and said that the money that you spent is not going to be deductible, and Congress is all over because Congress, both parties, Republicans and Democrats, are both saying that's not what they want. You heard it here. I predict by the end of the year that the money that we got and that got forgiven will still allow a deduction for the wages. I think we're going to have the wage forgiveness portion of PPP loans will still be allowed to be deducted. That's not what I say, that's what I think. All right, so watch for that one. Number 7. A couple of clients have parents that passed away in mid-2019, or in one case early this year. Parent received a $1,200 stimulus payment. They're wondering what should they do with it. If you look at last week's newsletter, we have a final answer on it, totally different than what they had told us 2 days before. And the answer is IRS is now saying, please send that money back. Now, they don't have any way. Yeah, I'm just commenting off the top of my head. They don't have any way to force you to send that back. But IRS is now saying, we really want you to send that money back. And if you want to, that's what we said. Number 3. Okay, I'll give you a little hint. This is question number 3. Let me look up here. Joanne, going to be fun to see what kind of accounting our client's going to give us, that's for sure. Let's see. Let me go through here. Tony had a smile. Barbara got it. Mike got it. And Mike got the freebie. Wasn't a Super B in 66? That's correct. There were no Super Bs in 66. They came out in 68. Sarah Rector, I meant for the errors on Get My Payment. Check the taxpayer's address with USPS. That's good. Thank you, Sarah. Good one to give us. Jim Leary. Yes, I did tell you what the car was last time I saw you. And Ryan has typed in it was a 1970 Plymouth Superbird in Alpine White. Thank you, Joan. And Rob, 1966 Superbird. You find that guy, Matt. Wrote down a 1966 Superbird. Find him. Okay, so here you go. Question number 3. You must spell the name right. Last name, okay. Who is TaxSpeaker's only female speaker? Number 3, who is TaxSpeaker's only female speaker?
Well, Levita Sure got the last name, but Judy Tax got the whole name.
Ed, you misspelled. Levita, you got the last name. I need a first name. And looks like Judy might have it. There's her email, Matt. judyhobby@yahoo.com.
We're checking.
Okay, we're checking, Judy.
Yep.
All right, Judy. Judy, you get number 3. All right, let's just see. We got a lot of people that's got it. I'm not a subscriber, so you don't get it. Man, we're coming in fast. Ed, you say you didn't get the name right? Yeah, well, okay. So a whole lot of you got it, but Judy, you're the winner. Yay, she says. Now, with this, when we send these, we will be sending a W-9. I'm sarcastic. No, we will not. It's under $600, right? It's a gift from Bob. It's not taxable. Okay, back to our questions. I've done the stimulus. Number 8. I've done some research, and I'm not finding an answer on whether a company can receive a PPP loan and also receive the sick leave credit and the child care leave credit. Well, in multiple issues of our newsletter, as well as all the presentation of the CARES Act course, I did answer this, and the answer is yes, you may receive a PPP loan and still take the sick leave credit and still qualify for the family medical leave credit, just not on the same wages. So if I got a PPP loan to pay wages, then any of the wages that I pay that I'm using for the debt forgiveness on the PPP loan, they're not going to qualify for the credit. But yes, it is possible on both. The guidance on this stuff, this also is changing on a regular basis. And, watch the newsletter. I'm putting so much work into the newsletter to try to keep you guys up to date. And you Q&A subscribers may be a little more up to date than everybody else because. Number 9, I'm a 100% owner of an S Corp. I do pay myself wages. I work out of my house, and my office has taken over around 35% of my house, I guess is a deduction, you mean. I think I read that I'm not allowed to pay rent to myself from the S Corp. Is that correct? I'm going to postpone that. I was told once a long time ago that the business could pay the mortgage, utilities, etc., because it was their benefit to have me here. It was long before the office was in my house. Is there any way to take money out of the business towards any of the expenses of the house? I've looked all over the IRS website, can't find anything. Okay, I'm going to give you some answers. First, yes, your company, your S Corp, may pay you rent for your house. But that's not the right answer. What do you mean? Yes, they can do it. However, there is a code section, a law, Internal Revenue Code Section 280A that says if you're working for the employer who's also trying to rent your house from you, then your expenses are limited to the allocated percentage, I think you said 35%, of mortgage interest, taxes, and casualty losses, and that's it. Well, Bob, that isn't bad. Well, what if I can do better? All right, so the answer is yes, you may pay yourself rent, but it's generally not the best treatment because your expenses are limited. How about I give you something else that allows you to take a portion of your utilities and your interest and your repairs and your insurance and your property tax? Would you be more interested in that? Of course you would. We all would. When I have an S Corp where I'm working out of the house, I have used for many years things called an accountable expense plan. And what that means is every month I have the owner say, here is the exclusive and regularly used percentage of my house, multiplied times all of my expenses this month for the business percentage, and they say, now business, you reimburse me. So the business, the S Corp, is not really paying rent. They are reimbursing the shareholder for his or her expenses. The business deducts them as normal. The shareholder does not have to pick any of it up as an income because it's a reimbursed amount. Everybody wins. The only thing is the shareholder, if they're getting reimbursed for a percentage of their mortgage interest and taxes, they can't double dip. They got to reduce their mortgage interest deduction by that amount. But the accountable plan is the way I go with S corporations. Now, IRS doesn't like that, but there is no rule against doing this one. Okay, number 11. Actually, is it time? How many questions do I have, Matt?
More.
You got 2 left.
11, 12, and 13. Okay, so let's do another question. Question, Barbara says, how about paying a management fee and putting it on Schedule C, taking a home office? I think that would be form over substance, and I'm not comfortable with that one. My personal opinion, anyway. All right, now I'm going to give you a couple of hints on here. I'm going to ask you a question about a person. Do not include my family in this answer. None of them are going to be correct, all right? So many of you know that my son Ryan is our IT director. My wife Jean, you see her a registrar. And whether you know it or not, my daughter-in-law Casey is the lady in charge of all the self-study and review questions. So they don't qualify as the answer. Secondly, our speakers will not qualify. You are wondering where I'm going. Many of you know Bill Leonard and I have been good friends and fellow speakers for 25 years. Our speakers do not qualify for this answer. So you've got to kind of be knowledgeable here. Number 4, which TaxSpeaker employee? I have talked about this person in class. Which TaxSpeaker employee, other than Bob's family, has been with the company the longest? Don't count my family, and don't count our speakers. So Bill Leonard's not correct.
Do they have to spell her last name right?
You do not have to spell this person's last name correctly because I don't think our office... Oh, Devlin.
Well, there's a full last name, or full name?
Holly, I think's got it here because, Devlin, you got the first name, you missed the last. Holly is a subscriber. Leslie, you got it correct. It is Samantha. Carol, you got it correct. Todd, you got it correct. But you needed to at least give me an initial for the last name. Hey, Sam, are you listening to this? So, is Holly a subscriber?
Holly's email?
Holly Halverson, we need your email to see if you are a subscriber. Because if not, who else we got? Man, we got a whole lot of people who's got it. Ed, you're good, but you're third. Because number 1 is Samantha Zarantanello. Yes, Holly at hollytax.com. And Sam is listening. Okay. So there you can see, do they see all these names too, Matt?
Yes.
Holly is a big customer, but I don't see her on the Q&A.
Not on the Q&A.
Oh, Holly, you're not a Q&A subscriber.
Oh, it says she is. Is it?
Oh, yes, she is.
Different email. It's not under
What
Holly.
email is it under?
Is it under a different email, Holly? Yeah, Joan says it's at joan@thetaxlady.org. All right.
I'd say keep reading and we'll...
Okay. Holly even says, I love Samantha, if that helps. So.
Okay, there we go. That's what we
Okay.
needed.
Is she qualify?
You sent the new email, yeah.
All right, so Holly Halverson gets number 4. I got one more,
By Samantha.
but we've got 3 more questions. Number 12. Due to the PPP funding changes, has TaxSpeaker's CPAs experienced any of their client lenders inquiring on the need for the PPP funds? We've had a couple of clients notify us their banks have sent out notifications in which they need to verify the need or prove economic hardship and that there's no other money to operate during this issue. I skipped number 11. I'll go back to that in a minute. I tell you, this whole PPP thing's got me scared. So the question is, due to the changes, are the banks starting to come back to the businesses and say, hey, do you really need the money? Do you have other sources of money? And the reason for this is, of course, the Treasury Director Mnuchin came out after those 70 publicly traded companies got money, came out and said, you shouldn't get the money if you've already got another source. This scares me. And yeah, I'm going to get back to these. I skipped one. I am scared of this. And I tell you why I'm scared of it. Because if you're like me, a lot of my clients got the loan not worrying about so much today, more worrying about what about 3 weeks from today? You know, we had some cushion built up. We were able to pay the bills, but we're worried. I'll tell you right here at the seminar company, our live seminar attendance, we're down 100%. What do you mean? We are down 100%. Last year at this time, we had over 100 registrants already for live fall classes. We got like 4 right now. I'm running scared. Not just me personally. Well, how many people then got the loan saying, you know, I'm okay now, but I'm worried about the future? To answer your question, this is the first time I've heard of a bank bringing it up, but I had an email early this morning from a family member who's also a longtime client. He said, Bob, I got the loan because I'm worried about having the ability to get through the summer. Do you think I ought to pay it back? And I called him, and I illustrated to him my concerns. We talked about it a little bit. You've got till May 14th to pay this back, and this is not what Congress wanted, I think. I don't think that the Treasury Director has done us any good. My client is saying, I might borrow on my credit line to pay this loan back, and I thought, and then what happens later this summer when his credit line is maxed out after Congress, or not Congress, the Treasury Director scared him? I wish I had a better answer. I'm as scared as you and your clients. If my argument is I got it because I don't think I'm going to be able to get through the summer, but I won't know till the summer comes, how can they hold it against us? Okay, let me go backwards. Number 10, what type of documentation do self-employed Schedule C individuals have to provide to prove proper usage of the PPP loan to have it forgiven? As of right now, which is May 12th, 2020 at 1:30 Eastern Time, yes, I'm clarifying, the SBA is saying you will go back and use 8/52 of 2009 self-employment income for the forgiveness portion of a loan to a self-employed person. So we're going to go back to last year. We're going to use 8/52, 8 weeks out of 52 weeks, multiply it times last year's self-employment income, 2019, and that's the portion that will qualify for forgiveness this year. Now, is that right or wrong? That's all I can tell you is that's what they're telling us. Okay, so that was number 10 as far as documentation. Number 11. How does a sole proprietor with only 1099 contractors use a PPP loan? They got the advance on the EIDL, so does that negate part of the forgiveness? You know, with the EIDL, EIDL, that's the one you get directly from SBA. It's the Economic Injury Disaster Loan. There are 2 parts of the EIDL. There's the grant, that's the 10 grand, and there's the loan. If you got a grant, that is supposed to reduce the amount of the PPP loan that qualifies for forgiveness. Yes, you may get them both. If you got a grant of 10 grand and you got a 100,000 PPP loan, only 90 grand of the loan is supposed to qualify for forgiveness. If you got a loan from EIDL, not a grant, remember the EIDL had a grant up to 10 grand, 1,000 per employee, and a loan. The grant reduces the PPP loan's forgiveness portion. The loan from the EIDL is not supposed to have an effect on the PPP loan. We're doing classes just on this stuff. It's so confusing. All right, so I've caught up.
There's some stuff on the screen.
Okay, we got some issues. Deanna, you jumped right out. They can't put everyone in jail. Carol, you said you'll come back to the live seminar, sit in the back. You just drive around the corner. May 14th, that's in 2 days, yes. Jim Leary, we have several banks in the neighborhood lobbing a shot across the bow. You know, like you, Jim, I am scared as well, but I still like Deanna's comment. They can't put us all in jail. Gross or net income on the Schedule C, that'd be net, Joan. We've kept our sense of humor, but the loans are no laughing matter. I agree with that. Ed, Bob, would you know where in Code Section 139 does it say that businesses can deduct qualified disaster relief payments? Well, 139 by its nature says it, but no, right off the top of my head, Ed, I don't know that one. Joan, on the PPP calculation for forgiveness, is that gross or net? That was net. Okay, I think it's time. I got one more question. Should I do the other question before the giveaway? Okay, so let's do one more question. You need to have first and last name.
Oh, no, I meant
Oh, do this question and then give it away when we're done.
Yeah.
Okay, we'll do that. The last question for Q&A for this week. It's your favorite topic for 2020, the PPP loan. Yep. We just watched a webinar on what expenses can be forgiven, and they said expenses need to be prorated to the 8 weeks from funding. So funding on April 27th with a Monday payroll on May 1st for April work performed, only the payroll for those 4 days would qualify for forgiveness, ? We understood that we would need to have a partial month payroll in June because the funds need to be spent within 8 weeks. This accrual for payroll, interest, rent, utilities, etc. is not something we saw or see clients being able to do themselves. Is that webinar correct, and has this headache just gotten bigger? Or was the speaker being too cautious and I don't need to invest in headache medicine at the present time? Well, first, I don't ever engage in he said, she said. I don't know what was said. I know it's very common for me to say something and somebody else to hear something else, so I can't comment on that. But I will tell you this. Again, I'll go back to what I started question 1. The law says the 8-week measurement period includes those expenses incurred and paid. And until that is clearly defined, which it has not been, the SBA has no guidance as of right now as far as what qualifies. Until that is clearly defined, no one, including me, can give you anything other than opinion on this. Here's my opinion. My opinion is that they are going to look at actual payroll checks written during that 8-week measurement period. If you're paying people during that time, if you're paying people that you owed, I think that we're okay. If you're trying to prepay, I don't know so much about that one, but incurred and paid, to me, if I pay it, it qualifies. If they decide that we're going to have to allocate, how the heck are we supposed to be able to do this? My opinion, they're going to look to the actual payroll checks written during the 8-week measurement period. That's my opinion. What I am telling my clients is change your normal payroll schedule. To get your 8 weeks, to get the payroll in there, don't go paying, 2 months in advance or anything like that. Just modify your payroll period. Pay every week or something like that. On the last day of the measurement, maybe pay that last payroll for the days earned. But as far as accruing and prepaying and all that stuff, no, I don't think they're going to look at that. Just like when they were calculating the amount of payroll that qualified to get the PPP loan, originally it was from some weird middle of the month, February 15th date back, and immediately the bank said that's not workable. We're just going to use 2019 calendar year W-2s. I think that's what's going to happen here. They're going to say, give us a payroll report showing the payroll costs gross, the healthcare costs gross that you pay during this period of time, and show us the payroll reports if appropriate to show if that's the case. That's what I think. That, it's an opinion. That's all it can be. So Trish says, do rent payments made by S corporations to their owners qualify for rent payments? They do, Trish, as long as you have a written lease from before February 15th. Ed, thanks, Bob. All I can find is the Joint Committee report. Let's see. Is this Q&A on the same day and time each week? We try to do the Q&A every day at 1 o'clock on Tuesdays. Is that right? Is that right, man? Yes, he says. If you use a PPP loan for payroll, why can't you use the EIDG for other allowed expenses and not reduce the EIDG? I think that's EIDL. For other allowed expenses and not reduce the PPP loan. I think you can. Joanne. Lonnie, what about increasing salaries, try to match the forgiveness? As long as you don't go above $100,000, I personally think that might work. It might work. OMG, what does that mean?
Oh my God.
Oh, I didn't know that. Well, I see that all the time. OMG, thank you for the great answer. Our bookkeeper is so happy to hear this as you speak. She'd kiss you if you were closer to Seattle. I don't want anybody from Seattle kissing me. All right, I'm telling you right now, you guys were a hot spot there early on. Trish, thank you. Mike, what about K1 SE income forgiveness? I'm not really sure what that means. I I think you're talking about flow-through income on a K-1 from a partnership, doesn't qualify. No, it's got to be W-2 wage. Partnerships have kind of a disadvantage on this one for that. Okay, so let's do our last giveaway. Is that right, guys?
Yep.
All right, I'm looking. We have in the back. Please let us know if you think if we've got something here. Can I share today's video with the tax group on Facebook?
This will be shared on YouTube, so they can share.
Ryan says it's going to be shared on YouTube, so the answer, Tony, is yes. And here we go, number 5. Are you ready? First and last name. Which president added the cost of living increase to Social Security? I am not a crook.
Let's see, here it comes.
Nope. Nope. Keep them coming. I even gave you the hint. There we go, Nancy. Is Nancy a subscriber?
Nancy Eston.
Need your email.
Nancy Aston, we need your email. You got a whole bunch of you coming in with answers. It was Richard Nixon. I am not a crook. Okay?
Nothing yet.
Nancy Aston, you win if you are a subscriber to the Q&A series. Here she goes down there at the bottom.
Got it.
She got it. Nancy, you get the last of the Samsung Galaxy Tab Ace. We had 7 of these. We're giving 5 away, but I think one of them might be disappearing for grandchild use. Already did, Ryan says. Folks, I want to thank you. This is something we just decided to do on a whim. Matt came up, said we ought to do it out on YouTube so more people can do it. And after doing 100 of these, that you guys pay for, we try to keep the cost literally down to amortizable cost of our equipment and software. So thank you so much for watching today. We may do this again, maybe next week. I don't know. I tell you what I'd like to do. I'd like to do one over in the shop with all the cars around. I think that'd be kind of fun if we have internet over there. But until I see you again next week, I'm Bob Jennings for TaxSpeaker. Hope to see you this fall at a seminar. Please, physically at a seminar. If not, we'll see you at a webinar. Until then, for all of us, for Matt Johnson, Ryan Jennings, Bob Jennings, Samantha Zarantonello down the hall, thank you so much. We'll see you again next time. Bob Jennings for TaxSpeaker.